Dubai is the go-to place for everyone looking for a tax-free lifestyle, right? No, not anymore, and I'm here to explain why. Hello, my name is Javier Correa, and I'm the tax director here at the Rothbard Group. Now, today's topic is Dubai. Now, if you have done any research into international living, offshore tax planning, tax-free living, then you definitely have come across Dubai. As President Macron would say, you have had to deal with Dubai for sure, right? So, in the case of Dubai, honestly, it's the most popular jurisdiction out there on social media, on Instagram, on YouTube. Everyone talks about Dubai. For a really long time, Dubai was the place to be, and everyone was talking about Dubai, marketing Dubai. It has also become synonymous with luxury and excess and super expensive cars and multi-$100 million apartments. And obviously, I can understand why many people find it seductive to potentially look at Dubai as an alternative place to live, especially when you're stuck in the West, paying insanely high taxes, and you look at what these people are promoting about Dubai and you're like, oh my God, this is the place where I want to be. Now, unfortunately, as it happens ever so often, the difference between actual tax law and actual tax policy versus what is said on social media makes a huge difference, right? And most often, these social media influencers oversimplify, misunderstand, or have outdated tax information. So let's talk a bit about how Dubai tax works right now in 2026, how it will work beyond 2026, and what the real impact of a global entrepreneur or investor moving to Dubai would actually be, and why Dubai is essentially not as tax-free as you may have thought it was. For a bit of context, Dubai is one of the 7 emirates of the United Arab Emirates, and the UAE introduced a business tax back in 2023 at the very low rate of 9%. So a lot of people back then, and I've been in the international tax planning space for years now, I remember a lot of people telling me, well, Javier, don't worry, it'll only apply to onshore businesses. So i.e., the guy selling a shawarma on the street, in Dubai, or the Carolina Herrera store at the mall, but it won't apply to people running international businesses from the free zone. It'll also only apply to corporations. It won't apply to individuals. That was at least what was said at the time. That was the trend. And for a really long time after that, people were scrambling to justify why Dubai was still worth it by trying to use these arguments. Now, the fact of the matter is the tax is here. The 9% tax on business has been implemented and it applies in a very broad manner. So let's go through it really quickly. If you have a Dubai company, it applies to you. If you have a Dubai free zone company, it applies to you in the vast majority of cases. There are a handful of exceptions, and I'll get to that in a moment. If you have a foreign company, but you're running it from Dubai, creating, even without knowing, unwillingly creating a permanent establishment, meaning that you're managing your foreign company from Dubai, you're directing your foreign company from Dubai, you're providing services from Dubai through your foreign company, etc., then that income attributable to that permanent establishment of your foreign company is subject to the 9% business tax. And the fourth and final element, which is the big one, the 9% business tax applies to individuals that are engaged in business in the UAE, which includes obviously the Emirate of Dubai. So even if you're a natural person, so an individual freelancing, if you're engaged in business for yourself, then potentially that 9% tax will apply to you. Now, as always, I like to be very objective with our viewers and very objective with our clients here at the Rothbard Group. And the fact of the matter is, there are still a handful of scenarios where you can run a business from Dubai and it can be fully tax-free. But those scenarios are quite restrictive. So number one, if you're a very small business, you can still make it work in Dubai. So let's say that you're, a small business, you're only making about $100,000 in profit per year, then that's fine. You don't meet the threshold to actually start paying the tax. So in the UAE, that 9% tax only applies to profits above and beyond 375,000 Emirati dirhams, which is about $102,000 US dollars at today's exchange rate. So if you're a very small business or a very small freelancer, sure, you can make Dubai work from a tax perspective. Now, good luck with the Dubai cost of living if you're at that level of income, but at least from a tax perspective, you're good. Now, let's say you're still a small business, but you're a bit larger than that. Let's say you're around, that high 6-figure mark. maybe, we could manage to get you that Dubai small business exemption that exists for businesses that have, income levels that don't surpass that $800,000 US dollar level. But ultimately, this is going to phase out. This is not something permanent. So if you're in that maybe medium, like small to medium business category, then sure, maybe there was some relief for you temporarily as a transitionary, cherry or gift from the UAE authorities as they were implementing this tax, but it's not something permanent, and it is not something you can actually rely on for business planning and tax planning in the future. So again, very limited in scope, and it will sunset sooner rather than later. And then the final relief that you can potentially obtain, and this is the only scenario in which maybe the UAE might still make sense for some people, is if your business is within one of the very specific activities that have been carved out by the UAE authorities that can still operate from the free zone and still get a 0% tax rate. Now, the UAE is very strict on this. There is a specific list, and most industries on the list are for very big players. So for the average entrepreneur out there, it's going to be very difficult to qualify. But hey, if you genuinely qualify for one of those exemptions under one of those business activities, then sure, you could be one of the lucky few that can still have a business in a UAE free zone and still manage to operate tax-free. Now, the reality of it in 2026 is that honestly, UAE companies are expensive. UAE free zone setups, having a flexi desk, etc., is expensive. And to get that 0% tax rate is very complicated. It's very compliance heavy. And ultimately, it's restricted to only a handful of business activities. Whereas there are other jurisdictions that are much more cost effective to set up and much more flexible in terms of the kinds of businesses you can actually run from or through those jurisdictions and still get a 0% effective tax rate on your income if you plan yourself out right. All of this is all good, but then you also have people telling me, well, Javier, but the UAE has not introduced a personal income tax, so we're still good on that front. And again, because I like to be objective, let's say it like it is. Yes, the UAE and therefore Dubai lacks a personal income tax at this very moment, which means that if you're a highly paid employee, sure, maybe the UAE can still work for you. Now, again, I wish you a lot of luck with that UAE cost of living. I mean, you would really have to be a very, very nicely compensated employee with a salary in at least the high six figures or the low seven figures to make a Dubai lifestyle worth it. But hey, I'm not saying anything is impossible. So sure, if you're a highly paid executive, maybe the UAE can still work. But again, you have to be very highly compensated for your labor in the company you work for. And then the other scenario where maybe the UAE could still make sense is if you're an investor. So if you hold crypto, you hold stocks, your main thing is capital gains through your portfolio, then sure, the UAE can still be tax-free for you. And in that case, maybe the UAE is still worth considering. Let's take a look at this from a broader perspective. If we compare the UAE to other jurisdictions, let's say, for example, the Republic of Panama. The Republic of Panama is by far the Rothbard Group's #1 international management and business planning hub for international and global clients. Now, Panama has a series of advantages that I think really give the UAE and Dubai specifically a run for its money. If you take a look at cost of living, Panama is by far more cost effective than the UAE. You can live in Panama for pennies on the dollar compared to what you would have to pay in the UAE. And trust me, if you've seen our real estate tours, and take it from me as a guy who relocated to Panama and has been through the process himself, you can live full luxury in Panama. We have private islands, we have beach resorts where you can, take your private helicopter and go. We have private airports. We have luxury towers. We have high-end real estate. You have the Miami lifestyle, but at a fraction of the cost. Whereas in Dubai, you may potentially have a version of the Miami lifestyle, but at triple the cost. So, it's up to you to do the math, but ultimately from a cost perspective, Panama definitely does hold an advantage. Let's talk about taxes, our favorite topic here at the Rothbard Group. While the UAE does give you some advantages on the individual level, like I said, if you're an employee or an investor, it does make it difficult for you if you run a business or if you're engaged in business activities. Whereas in the Republic of Panama, you don't let the headline tax deceive you. Panama has a very strict and very well-developed territorial tax system, which means that unlike the UAE, where you have to pay attention to the type of activity and you have to pay attention to the income thresholds, Panama, as long as you're generating foreign source income, as long as your income is categorized as foreign source, Panama doesn't care how much money you make or what kind of business you're involved in, meaning that you can essentially engage in whatever business you want, from international trade to consulting to SaaS, software as a business, to Amazon FBA, you name it. As long as we set up your business in such a way that it's generating only foreign source income, you can make $1 million, $10 million, $100 million, $1 billion, $1 trillion, and you're still going to be completely tax-free in the Republic of Panama. To have that equivalent treatment in the UAE, very difficult. Only the handful of businesses that operate in the select categories of the free zone are given this courtesy. And again, it comes with a lot of caveats and a lot of conditions. The Republic of Panama is simply a lot more flexible. Then when it comes to time zones, I mean, listen, that depends on the kind of business you're running, but here at the Rothbard Group, we work with a lot of Americans and Canadians who say, I want to save on taxes, I want a lower cost of living, but I still want to be able to call my team in Miami, in New York, in Toronto, or my clients in San Francisco and not have to wake up at crazy o'clock to be able to talk to these people. So in that case, obviously I don't have to spell it out. The Republic of Panama is situated geographically in a much more advantageous time zone that is perfectly aligned with North America versus the United Arab Emirates. If you're doing business with Asia, Africa, or maybe Europe, then sure, Dubai is obviously potentially more strategic, but if it's North America you want, then Panama is much more advantageous. And then there is one final element that I think people should take into consideration, and that, listen, I'm not afraid to say it, a lot of our clients say it in our private sessions, which is that ultimately there is a cultural element to consider. The UAE is obviously a country that is predominantly Islamic when it comes to the rule of law, etc. Obviously, Dubai is very westernized. We do acknowledge that. But, I've worked with clients saying like, hey, I don't want a special permit to buy bacon. I don't want to have to go to a designated area or to to be able to show that I'm this or that in order to buy a bottle of wine. In the Republic of Panama, obviously being a Latin American country that is predominantly Judeo-Christian, the cultural shock is going to be less present. Now, again, I do want to emphasize the fact that Dubai is very westernized, and ultimately you do have the ability to live a very Western lifestyle within Dubai itself and the UAE in general, but there is always that cultural element. I'm not saying it's good, I'm not saying it's bad, that's up to you to decide, but ultimately it is true that from a cultural perspective, there is more fluency and maybe more direct compatibility with a Republic of Panama than there will be with a Dubai or a UAE in general. So what's the bottom line here, folks? Can you save on tax by going to Dubai? For sure. Yes, it depends. If you're an employee, yes, you can go to Dubai and save money on tax. If you're an investor, your crypto, your stocks, sure, you can go to Dubai and save on tax. If you're a business owner, can you go to Dubai and save on tax? Maybe. It depends. In a very handful of cases, yes, but the general answer is more no than yes. I mean, you will be able to save on tax compared to operating your business in a high tax country, but you're not going to hit zero. And ultimately, your operational costs, your cost of living are going to go through the roof. Is Dubai a definite no for everyone? Not necessarily. You can like the lifestyle, you can like other things. If you want to explore other options, if you want to talk to somebody that will lay it down for you like it is, that will not simply talk about Dubai as the be-all and end-all just because it is Dubai and want to enamor you with Dubai, we welcome the opportunity to work with you. Rothbardgroup.com. Thank you. This was Javier Correa, Tax Director for the Rothbard Group.